Exercise 11.8 is a basic cash flow problem. They ask us to do this statement of cash flows by the indirect method for hardware suppliers. Well, they tell us that this company had $165,000 in net income. Now we know that that includes both cash and non-cash items. We have to go through and remove the non-cash items. So let's take a look. First thing they tell us is that there's a gain on the sale of land. Well, that may be a cash item, but that doesn't belong in the operating section, so we have to subtract the gain of $20,000 from the operating section, and then we would add that back in below in the investing section. The next thing they tell us is the accounts receivable increased $35,000. That means that we recognized more sales than we collected for. As a matter of fact, we recognized $35,000 more in sales than we collected for, so that's not cash. That's accounts receivable. We subtract that. Next, we have our inventory, and our inventory went up. When inventory goes up, cash goes down. The simple reason for that is when inventory goes up, you have to buy it. So our inventory went up by a total of $20,000. So we have to subtract that. And accounts payable went down. That means we owe less money this time than we did last time. We paid down some of our bills, and of course when you pay down your bills, you use cash of $55,000. So we subtract the gain because that's an investing activity that goes down below. Our accounts receivable is not cash. That's the very definition of accounts receivable. Our inventory went up, which means our cash went down. We had to pay for it. And last but not least, we paid down some of our bills. So all of those are reductions to net income to adjust it for cash. And when we do that, we come up with $35,000. So we started out with 165, but when we were finished, we had $35,000 in cash.